Number two thing I think you need to be prepared for and be doing is raising capital. Now, when I say raising capital, some people think raising capital means go out and ask your friends for money. Well, that could be true. But I think when people hear the term raising capital, they think, you want me to come pitch to some venture capitalist fund or, you know, like, do I go talk to some billionaires and ask them to support my idea? And that's not what I'm thinking about when I'm talking about raising funds. You as an individual can raise funds. So I'll give you an example of one way I'm raising funds. There's just a couple things you can do as a consumer, and some I've even done for myself. So number one, I've opened up some new lines of credit. Now, do I need those lines of credit? No, but I'm gonna give you a pro tip here. You always want to apply for credit when you don't need it. Because guess what? When you actually need the credit, the banks don't want to lend it to you. See, if you go into the bank and say, "Hey, I'm in trouble. My business isn't doing good. Well, I just got laid off, and me and my wife and my kids, we risk losing our house any day now. Can you loan me $100,000?" They're gonna say, "Let me get back to you on that next year when you get a job and when things are going better." You know what I'm saying? Like, they kind of just played you. But and what I mean by that is they're going to ask you for, well, give us 2 weeks of a pay stub. Give us your last year's tax returns. You're like, "I don't have a pay stub. I just got laid off." And see, they ain't trying to hear that. And so you need to be raising cap. Now, I can't lay myself off. I'm my own business owner, but I'm still taking the same mindset as if I was an employee. I'm applying for credit lines and raising capital now, because if I ever need it, which I hope I don't, but I'll tell you how I'll use it either way, whether I need it or not. I'd rather have the capital while life is good, while my credit is good, while I don't need it. And that's what I have lines of credit open for. I won't go into the numbers, but I never use them. And when I go into the bank and when I apply for those, they're like, "What do you plan to use the money for?" I'm like, "Nothing. That's why I'm here when I don't need it, because I know you won't give it to me when I do need it." And so, excuse me. And so the key is to open up lines of credit when you have a job. You still have the 2 weeks pay stub that you can show them, because if you come in there after you get laid off, they ain't trying to hear it. And sometimes having that $10,000 line of credit, 20, 50, whatever you can get approved for. Now, I'm saying lines of credit because lines of credit are normally what businesses use, and I have a business, but you as a person could open up a credit card that could have a cash advance portion to it. In fact, I actually do have a line of credit as an individual at the credit union. So they do give lines of credit to you as an individual where you can just pull that money out and use it for anything, no questions asked. All right. Sometimes all you need is $10,000, $20,000 to get you through this gap period until things pick back up without you having to sell your car, sell your home, and have a fire sale just to make ends meet. Sometimes all you need is that bridge loan, that bridge gap, but they don't want to give it to you when you actually need it. Now, so that's one thing you can do, open up lines of credit. Two, you could apply for credit cards, right? Yes, you're going to be paying a little bit more in interest if you were to pull the actual cash out, or if you're charging because the interest rates are going up. But again, sometimes all you need to do is float until you get to a better position. All right. Now that's playing defense. It's just preparing for, like, in case you get laid off, in case, you got to float some bills for a while. That's playing defense. Let's talk about why I'm opening up lines of credits, and that is to play offense. So I want you to think about it like this, or I don't want you to think about it like anything. I'm going to share with you how I'm thinking about it. So I've been talking to some people, and some of my friends and stuff are like, "Look, I think it's going to be a squeeze in the real estate market." Some people that are over leveraged, bought some assets, thought they was going to be able to refinance it later. We think some people are going to get squeezed out of the real estate market. There'll probably be some fire sales. There'll be some people who lose their jobs, who might have gotten to the real estate game and have to let go of some prime properties. And so here's the thing. As I raise capital, I've seen the '08 crash. I've seen .com burble bust. I've lived through some stuff, and I'm young, but we've all lived through pandemic, different things like that. And so one of the things that is consistent with anybody you talk to through the pandemic drop, through the '08 real estate market crash, is there's a consistent theme is that I wish I had more money to buy more houses. I wish I had more money to buy more stocks. I wish I understood real estate. I understood the stock market. And so that's what I meant by don't be scared, be prepared. If you don't understand real estate, this is a good time to start studying it. Because once the deal is in front of you, you can't be like, well, how does this work? How do you find renters? And like, how do I get a mortgage? Like you late to the party. And then you like, how do I get money? I just lost my job. It's like, oh my God. Thank goodness you found this podcast. Okay. So you late to the party. Same thing with stocks. I'm telling you, there's some places I was doing some calculations. I'm like, I could borrow $500,000 and it'll cost me like $2,500 a month to borrow $500,000. I'm telling you, with that $500,000, I can put it in the market once I get a good feeling for if we bottom and starting to head back up. Trust me when I say, if you saw me make $100,000 in one day, there's some damage I could do over 30 days with an extra $500,000 when the opportunity presents itself. Now, I'm not just pulling money out and just doing stuff just because I got some extra money, but I'm saying I got the lines of credit. I got some other things on standby that I'll have access to now. And I won't have to go ask no questions later. When it's go time, I'm just doing a wire transfer for whatever we need to do with whatever we need to do. You see what I'm saying? When it's go time, it's like, boom. Yep. I don't even got to call nobody. It's like jump on the computer, boop, send a wire. We just bought that multi-family unit. Or it's like, ooh, Amazon got down to what price? Go ahead and do the wire. Give us about, 300,000 shares, right? So we want to be prepared because I don't want to be looking back like, man, I wish I had more money. I wish I understood how this worked, right? By the time you studying and trying to figure out how it works, the moment has passed. So that's why I started this out with what is being prepared. Number one, having the knowledge. All right. Number two is raising capital, having the money, the funds available when it's go time.